that maybe some of this was political. Clearly, this issue is getting away from one party. And maybe they were like, look, this is going to be a huge story. If it's denied, it'll have legs. Big asset managers involved, and potentially they're thinking that we can't be seen as this anti-crypto.
I think there has been a complete sea change in Washington around crypto. I think the reason for it is that traditional Wall Street wants in on the money that crypto is making. And it's no coincidence that Schumer is located in New York, that the financial services industry is the #1 donor to his campaign. I just think there's this unusual, uneasy alliance that emerged between crypto and traditional Wall Street that is going to lift the industry higher. And if we continue to see these sorts of wins, going to lift it to all-time highs.
Cryptocurrency investors were taken completely by surprise when the U.S. Securities and Exchange Commission, SEC, asked exchanges to update 19B4 filings on an accelerated basis for spot Ethereum ETFs. According to CoinDesk, which broke the news on Monday, the agency asked aspiring Ethereum exchange-traded fund exchanges to update the filings ahead of the May 23rd deadline, a huge reversal in tone after the SEC all but ignored the applications for months. Though would-be issuers also need their S1 applications approved before the launch, which could take an indefinite amount of time, senior Bloomberg ETF analyst Eric Balchunas says this development signifies that the SEC may be ready to approve the spot Ethereum ETF applications. In a tweet shared on Monday, the ETF analyst said he and his Bloomberg colleague James Seifert were increasing their approval odds for the applications from 25% to 75%. Eric joined Unchained's Laura Shin for a discussion on Tuesday, alongside Matt Hoogan, crypto enthusiast and CIO of Bitwise, which also has an application for a spot Ethereum ETF before the SEC. During the discussion, the trio speculate about the political motivations for the SEC's sudden reversal. It's no news that the cryptocurrency industry has become a major campaign issue in the United States. Earlier this month, while addressing a group of pro-crypto supporters, former President Donald Trump urged those in favor of crypto to vote for him during the November presidential elections and mocked President Joe Biden for his poor understanding of the industry. Trump also announced that his campaign would accept cryptocurrency donations. Days later, Chris Giancarlo, former chairman of the Commodity Futures Trading Commission, CFTC, hailed Trump as America's first crypto president, adding that the former U.S. president has played a pivotal role in the cryptocurrency industry. During the discussion, Hoogan explains that in addition to Trump's endorsement, big Wall Street players are showing more interest in the cryptocurrency industry and putting a lot of pressure on regulators to give more legitimacy to the industry in the United States. As we bring you clips from the highly insightful discussion, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for tuning in, and enjoy the video.
I nearly fell out of my chair when I heard about it, slightly before the news broke. And at first I was like, how does it make sense? Because everybody you talked to said there was no comments from the SEC. And to me, silence is bad because remember, in all the Bitcoin cycles, they were silent, delayed, and then denial. So silence is associated with like, we're not doing this. Communication is associated with we're doing this. So that's where our pessimism came in from. But I have to think that maybe some of this was political. Clearly, this issue is getting away from one party. And maybe they were like, look, this is going to be a huge story. If it's denied, it'll have legs. Big asset managers involved, and potentially they're thinking that we can't be seen as this anti-crypto. That's my thesis on. It's just everything else spoke to denial. And the people I talked to were also shocked. And these are people who have been working on this for a while. So I will have to eat a lot of crow because I said I was pretty out there saying that credit to James Seifert who kept this at 25% odds. I would have gone to 10, maybe 5, to be honest. So he was like, no, just keep it at 25. So at least we were only 25. Thanks, James. But I think I can rest assured there were many articles that came out in the past month that said issuers were saying it doesn't look good. I mean, it wasn't just me. There were many voices and many sourcing. So shocked That said, I'm pleasantly shocked. This is a much more fun shock than on the reverse. If we were bullish on the spot Bitcoin and they didn't approve, that would suck. So I was personally for it. I think ETFs are great. They could track anything pretty much. So I was like, this should happen. I was just trying to be right. And what we were, all of the signs pointed to no. So sounds like it was a last minute decision, to be honest.
I'll build on the SAB 121 comment, which is I think there has been a complete sea change in Washington around crypto. I think the reason for it is that traditional Wall Street wants in on the money that crypto is making. If you remember, shortly after the Bitcoin ETF launch, a panoply of Wall Street lobbying organizations, the ABA and others, put out a letter requesting the ability to enter the custody space. I think they saw the amount of money that could be made in custody and could be made in stable coins. And I think Wall Street is now pushing for crypto legislation and regulation that would allow them to compete in this marketplace. And I think that's the change that happens. You had Wall Street fighting crypto, and then BlackRock came in, the ETFs were a success, Tether is making more money than Goldman Sachs, and now you have Wall Street wanting to get in on that. And it's no coincidence that Schumer is located in New York, that the financial services industry is the number one donor to his campaign. I just think there's this unusual, uneasy alliance that emerged between crypto and traditional Wall Street that is going to lift the industry higher. And if we continue to see these sorts of wins, going to lift it to all-time highs. And I think the same thing is happening on stablecoin legislation, right? This is not just SAB 121. That's like the canary in the coal mine. This is a complete shift in favor of certain parts of, let's say, the emerging regulated parts of crypto, which seem to be Bitcoin, possibly Ethereum, certainly custody, and I would say stable coins. I think those are entering the mainstream, and I think it's a complete game changer for the industry.
On May 16th, 2024, the US Senate voted 60 and 38 to repeal the SEC's Staff Accounting Bulletin 121, SAB 121. This regulation was initially designed to enforce stringent accounting and disclosure requirements on companies holding digital assets for their customers. The SEC's rules were intended to enhance transparency and improve risk management practices in the crypto industry, thereby protecting investors and maintaining market integrity. However, the implementation of SAB 121 raised concerns within the crypto industry. Many stakeholders viewed it as an overreach by the SEC, arguing it imposed undue burdens on companies and could stifle innovation. The repeal of SAB 121 underscores the ongoing debate over the appropriate level of regulation for the crypto industry. The Senate's decision to overturn the regulation reflects a recognition of the potential negative impacts of regulatory overreach and a bipartisan effort to create a more balanced regulatory environment. This move is significant for the crypto industry, as it seeks a regulatory framework that protects investors without stifling innovation. Whether the move is politically and financially motivated remains to be seen, but it's a huge advantage for the cryptocurrency industry. Let's get back to the interview as Eric and Hugen present their views on when the approvals can be expected and how successful the products will be, especially compared to spot Bitcoin ETFs.
If this was done all last minute, I would assume that if the 19B4s were okayed, because they have to make a decision on those, I believe, by the 23rd. The S1s, they can take more time, but they can't go out until that's done. So it's possible that we've got weeks, but I don't know, because I can't imagine you can clean up the S1 to their liking if you have had no comments. So there has to be some time for that, I would think. Normally, this would have happened already. That's what we haven't had. There's been no communication. So this is all very weird. But my guess is, remember, Matt, we were on a podcast together. It was with the guy from Valkyrie, and he was saying that they might approve 19 before and then take a month for the S1s. It didn't turn out that way, but the mechanics of that could be what we see here. I think just the outlook in general for them, I'm mild on. Matt may have a great countertake to this, but I don't see them, assuming they launch and they're out and they're trading, I don't see them getting more than 10% of the assets that's in the spot Bitcoin. It's possible. Well, I would say that 10% is 50 billion is pretty good. That's 5 billion. That's it. I mean, all the numbers are so wild. Everybody's gotten so spoiled to these big numbers, but like even 5 billion would be a major deal. So, but I just see them as 10%, maybe 15%. So when it comes to this area, it's good having choice. Great. I don't know if it will be as exciting as the flows won't be as big. I think for the normal person, one's enough, right? And this is the one they know is like the gold. And so I think that's going to satiate most of the normal people. You'd have to really have a bull case for this other one to buy it, in my opinion, that would be specific to that. Whereas I think most just are satisfied with the one.
I would add, I mean, I've previously said that I thought spot Ethereum ETFs would gather more assets. And indeed, the ecosystem of crypto ETFs would gather more assets if Ethereum ETFs were approved in, let's say, December or January. Because I think we need, Bitcoin ETFs still need some time to cook. They're not yet approved on all national account platforms. They're not through the due diligence process. Adding a complication is adding a complication. So I think Ethereum ETFs, if and when they're approved, are going to be a slower burn on asset gathering. And it's actually going to be more about the growth of the Ethereum ecosystem than the growth of the ETFs. That's another point I would just make to close. I don't know if this makes sense to Eric, but Bitcoin's primary utility in the world is as a non-sovereign store of value. It's literally primary utility as an investment. And therefore, an ETF is a major development in the Bitcoin ecosystem. Ethereum's primary utility is as gas to power ETH-based apps. The investment angle is not as direct on Ethereum as it is on Bitcoin. And for that reason, I'm aligned with Eric. I still think an Ethereum ETF would be great. I think Ethereum is an exciting investment. It has non-correlated characteristics. It has cash flow characteristics. I'm very excited about the Denkun upgrade, what that means for user growth and adoption. But it's not as clean as the Bitcoin ETF in terms of its impact on the actual use case. It's more separated.
Ethereum investors have been celebrating the news since Monday. Earlier today, Matrixport reported on Twitter that the largest altcoin registered its largest one-day point move ever on Monday, fueled by the potential approval of spot ETH ETFs by the SEC. According to the Post, Monday's gains exceeded the single-day gains recorded around May 2021, when DeFi volumes were near their peak and Ethereum staking became very popular among investors. Real Vision founder and CEO Raoul believes even higher price moves will come after the approvals. In a post shared on Twitter, Pal wrote, "One more thing I've been talking about for a while. What the hell happens to the price of ETH if there is a big demand for the ETF and 30% remain staked off the market? And burning makes supply deeply negative as activity rises? That could create a banana zone squared." While the industry awaits the SEC's next move on the May 23rd deadline, do you think spot ETH ETFs will be approved? And how do you think that will impact Ethereum prices? Please share your replies, as well as comments on the video and Pal's tweet, in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.